SOFI Technologies is one of the few stocks we regularly cover here on the channel that trades under $10 per share. And I think when we go through the Q2 earnings report and we look at the numbers and then we look at this from a technical perspective, I think you're going to see there's a couple of reasons why. What is going on, investors? Hopefully, guys are doing well out there. If you've been holding SOFI stock for any length of time, you have been brutalized. Year to date, down 59% over the last year, paints an identical story to that. Now, we do have a $5.86 billion valuation on this one and a whopping 19% short interest. So after this company reported their earnings after the bell, with revenues climbing over 50% over the last year to $356 million per share, SOFI stock is popping up 7% in the after hours. But then keep in mind, there are some shorts that are willing to cover based on these news, because I tell you what, when you have a 19% short interest in the stock, it really, what it all boils down to is investors just simply do not believe this forward guidance over at SOFI, which if you look on a quarterly basis, Wall Street, while there's not very many analysts covering this stock, they are all incredibly bullish, projecting over 40% growth rate out into next year. When you look at the full year estimates, you get 2 years of 40% growth over at this company, and then it slows to a 20 to 30% growth rate over the following 2 years. Certainly for a financial institution, almost unheard of. So when SOFI released their Q2 earnings today, we also got an update on the most upcoming quarters as well. So this being Q2, the management gave us guidance for the second half of the year, essentially Q3 and Q4 over at SOFI. And the revenues are expected to come between $830 million all the way up to potentially $835 million in revenue. Again, that's for the upcoming 2 quarters to take us to the end of calendar year 2023. That would represent essentially 50% year over year growth. And again, there's a lot of people that are short this stock that do not believe that the upcoming 2 quarters could represent 50% growth. Now, I did add up expectations for Q3. Wall Street had SOFI projected at about $389 million worth of revenue. For Q4, expecting $417 million worth of revenue. If you add these two numbers together, you get a number close to $807 million. I'll remind you, for those quarters where Wall Street is expecting $807 million worth of revenue, SOFI just said we should do between $830 and $835. Now, for the full year, you can clearly back into that number by adding the first and second quarter that's already happened. SOFI projected between 1.5 and basically $1.5 billion worth of revenue for the full year. If you come to the full year estimates, that's basically where Wall Street had this one. Again, if you come basically where Wall Street expects you, many of these shorts are probably going to have to cover. The last thing I'll point out in terms of their Q2 outlook, which we'll talk about right now, we'll go through the entire financials over at SOFI so you understand, because you got to understand, is this company going to meet and exceed expectations? Because if there are, there should be a pretty large short squeeze in this stock at some point. I'll note that the company gave guidance for Q2. Obviously in Q1, they expected revenues between 330 and 340. The company just printed 356. So there's probably some very bullish investors out there that are looking at 830 and 835 for the upcoming 2 quarters combined, thinking that, yeah, the company could be coming in towards the high end, if not over that. That certainly is the very bull case scenario. Now, in order for the bull case scenario to play out, this company has to keep revenues accelerating in that 40 to nearly 50% range all the way into essentially all of 2023, with Wall Street expecting maybe 20% growth thereafter. Similar story when you stretch this out several years, although there's very few analysts covering this into the future. Analysts also expecting profits by the end of 2024. So that's another short thesis, as this company is not projected to make positive income for the next 2 years. They are likely, when we look at these financials, probably going to have to raise money over that period of time. That certainly could be dilutive from a share perspective. Now, in terms of this total interest income over at SOFI, we had the most recent quarter coming in at $149 billion with a massive increase to the loans that this company originated over the quarter, from 79 million last year all the way up to 145. That is spectacular. Here's even better than that, the fact that this company secured a bank charter, so now they're able to take in deposits and use that deposit money that they're paying a very low APR on to then loan it to other customers over at SoFi. Look at your interest expense, and this is definitely supporting the bull case argument over at SoFi. Look at your total interest expense. I told you our interest income went from 84 million all the way up to 149. That's a massive growth on this. But look what happened to your interest expense. It actually went down because of that bank charter. You went from $28 million in interest expense last year all the way down to $26.8 million. That means your net interest income went from 56 million, that's a double, all the way up to $122 million. If you believe that this company is going to continue to take on deposits and then be able to loan that successfully out to other clients, well, this net interest income should continue to rise, and that's incredibly bullish considering that interest expense is now pennies on the dollar when compared to previous business models that SoFi had to operate under. Now, this company certainly in the past has relied actually more on non-interest income. This is servicing. These are the loan originations. They essentially originate the loan, then they sell it to some other financial institution. Still the biggest business over at SoFi at $239 million. But I think we are going to project out here into the future that a much higher margin interest income business, probably going to become the dominant business over at SoFi, again supports kind of a bull case scenario as your net revenue over the last year went from 231 all the way up to $362 million. Now, some of you are probably wondering, well, what's the problem? Why is the stock down 50 something percent? Why is the stock essentially a penny stock? Well, the company still has a lot of expenses, as you can imagine. Take a look at technology and product development over the last year, went from 69 million up $30 million to $99 million. Now, we talked about how this company has sensational growth rates at 50% year over year and essentially out into the future 2 years. Wall Street's expecting 50% growth. What's probably also going to grow 50% year over year is the sales and marketing. So look at your sales and marketing. Went from 94 million up basically 50% to $143 million. So yes, it's impressive when you have these type of 50% growth rates on your revenue side, but understand that SoFi is spending 50% more on marketing. Now, obviously, again, the bull case scenario is that these people that they are acquiring as customers via this marketing end up getting a car loan, have a savings account, a checking account, and do all this business with SoFi over the course of their life. If that is the case, obviously this marketing spend certainly more valuable than just 1 quarter of revenue growth. You've got cost of operations ballooning from 60 million up to nearly $80 million. General and administrative, finally, this has pumped the brakes. This is something that could have gone in the camps of the bears. It's still just massive. Look at this general administrative expenses, 171 last year, all the way up to 125, only to be exceeded by your sales and marketing spend. Your general administrative line still just massive over here. The executives are just making it rain over at SoFi. Private jets, lavish parties. That is what's happening when you look at that kind of general and administrative expense. Provision for credit losses, that goes hidden down here in non-interest expense at about $10 million. But when you're originating more loans and keeping them on your balance sheet, you are recognizing. So these margins look spectacular, and they are, but just factor in, you've got another 10 million here essentially on that expense side that shows up down here in terms of these credit losses. That is up massively year over year, but we'd expect that with the shift in business and revenue mix that SoFi is now operating in. Now, we've got our total interest expense coming in at $458 million. I talked about how they had net revenues of 362. We minus off 458, and you get to a negative operating income at $95 million. Now, it has improved. Last year, you lost $165 million. Now you lost $95 million. There's a lot of basically the short thesis is this company is not going to maintain these really really accelerated growth rates, and they're not going to be able to spin into a profit, or at least a close enough to a break even, without having to do a lot of dilutive financing. And then on top of that, when your stock is $6, you're going to have to probably do a reverse split and then a fundraise, which is really a double whammy for the stock price. That's essentially the short thesis, I would guess, in a nutshell on this one. And quite frankly, if you have a deterioration in the economy, that's certainly something that could play out if SoFi's customers get materially worse over the next couple of quarters. Now, from a balance sheet perspective, you can see why. Okay, yeah, in terms of total cash on the balance sheet, you got about 900 million, or really close to $1 billion. Plenty of cash, quite frankly, but it has come as a cost to shareholders as this company continues to do dilutive financing. Now, from a cash flow perspective, I wouldn't analyze SoFi necessarily from a cash flow basis, because you look in the most recent quarter, at least from the operating perspective, you lost $1.9 billion. Last year, you actually made 82 million, but it's because you have some accounting irregularities here where they have to recognize cash flowing out for loans that they'll likely go and resell in the later days and weeks ahead. But there's some things to note here. You have $157 million worth of stock-based compensation, whereas last year you were sitting at just 89. We thought that was egregious. This is putting and going to continue to keep a lid on this stock. While it continues to be volatile, I would argue most of that has to do with the short interest. You have a lot of selling pressure on this stock when you're giving out $157 million worth of stock-based compensation, especially on a $6 stock. That is going to create an overhang on SoFi, and I'll describe from a technical perspective the type of stock this is for most investors. From an investing perspective, I noticed, boy, they are doing heavy investment over at SoFi. Purchase of property, equipment, and software accelerated to $50 million over the last 6 months, and last year was just $26 million. From a cash burn perspective, because that's probably important to a lot of you out there, considering from an EPS perspective, we're expected to lose money over the next essentially year and a half over at SoFi. Well, in this most recent quarter, they actually had a net increase of $230 million to their cash position. So this company, why they continue to lose money, it's hard to imagine outside of a pretty big economic recession, maybe slash depression, depending on what they decide to call it, over in Washington, that could introduce more of this short thesis. But the fact that this company remains cash flow positive should be bullish for at least the cash position that this company has. Now, in terms of a technical perspective, this has actually done something kind of interesting. If you've been following the channel, almost every stock we're looking at is in this downward channel. This one's actually broken out and gone sideways. We'll talk about what that means here in a minute, but I do have the volume profile here. This is on the left-hand side. It is showing you there is a ton of demand. People are been buying the stock at this level. And then more importantly, above that, there's clearly less demand. There should be some supply on this stock. When it gets all the way up here to about $14, $15 per share, we'd expect pretty heavy selling and resistance if and when it gets to that level. Now, I'm going to take off this volume profile and zoom into more of our more recent price action over at SoFi. It's broken out of this downward channel, and from a technical perspective, I'm actually going to probably be able to take that downward channel away, because technically we're kind of forming some kind of bottoming or at least a flattening perspective. I'll keep our lower trend line in right now, but I do want to show you that the dominant trend in the very short term over at SoFi is basically sideways. Now, I would say the longer term trend is clearly down in this one, but I did say intermediate trend in this one is starting to go sideways. This doesn't scare most shorts away, as they have a clear area where they'd have to start thinking about covering. That would be a break above this sideways consolidation line, which is currently trading at least over $7.30 per share. I would say it's probably more technically up here at about $8 per share. If I was short this stock any length of time, I would not want to see this one break out and above $8 per share. That would absolutely show you've got some momentum in this stock, and it broke through a key area of resistance. But it wouldn't surprise me, probably wouldn't even surprise a lot of short sellers, if this one walks all the way up here to potentially $8 per share, but there's probably even a level just shy of that at about $7.50 per share. Again, the stock is trading in the after hours close to $6.87 per share. So this is not a huge move to go from 687 up here to about 750. Should start meeting some resistance here. You might even have short sellers that have already made money in this one come back and pile in again on this one. And I think you could have a retest down here at the low end at about $5 per share. But in the shorter term, you do have a shorter term uptrend materializing. I think you could retest back here at about $6.40 per share, essentially where the stock was today. If you are bullish SoFi in the longer term, you believe their bank charter is going to acquire a ton of assets. There'll be maybe a mild recession here in the United States, but that will be followed by an appetite to lend and borrow money, maybe potentially at historically slightly higher rates than the last recovery that we saw here in the United States. Well, you want to buy this stock when it retests the bottomed area of consolidation, which on the low end, again, is down here at about $5.20 per share. In the mid-tier, about where the stock traded today at about $6.40 per share. On the very bear case scenario, I would have a stop loss on this one probably at the very lowest, about $4.50 per share. Something would be incredibly wrong with this stock if it breaks down through that level. Certainly some kind of press release, some announcements, and certainly macroeconomic deterioration could blow that through there. But quite frankly, when your stock is down over 60% over the last year, a ton of bad news is priced in. And when you've got a just $5.8 billion valuation on a company growing over 50% on the revenue side, I'm talking about a ton of bad news is priced into a stock like that. And certainly if the regulatory environment was a little friendlier, a stock like SoFi would have already gotten scooped up by one of the big banks, because if this company's bullish growth profile maintains, certainly will be taking some market share from those larger banks. Hopefully you guys enjoyed today's video. I'll be back again soon with more. Good luck with your investments.